So let's go ahead and get started. Thank you all for joining. I'm going to start recording now. Yep, we are recording, so there we go. Thank you, Katie, my secret co-host. So again, everyone, thank you for joining us. I'm Brian Bolton. I'm a finance professor at University of Louisiana at Lafayette. For this year, I've been serving as the content expert for financial literacy for the UL system. We have several content experts across different topics: online learning, research grants, mental health. And our job is to design programs, resources that can serve the entire system. And this is one that Katie and I have been thinking about offering for the past 2 months, and since the Biden administration announced kind of restructuring or the debt forgiveness plan back in August, 2 months ago today. And Katie kept saying, let's wait, and everything's too uncertain. Let's wait until we really know more. And then we planned it, and then over the weekend, even more uncertainty came out. So we'll push through with what we know and what we kind of the process, the structure is, and talk about that, and kind of maybe some kind of prepare for continued uncertainty, but hopefully we'll get more resolution or certainty one way or another with this proposal over the coming days or weeks. So again, thanks for joining. I'm going to go to the slides. And again, please feel free to unmute yourself and shout out any questions, or if you have corrections. If you know something I don't, please don't be shy, or you can use the chat, obviously. So hopefully you're here for a UL system session on federal student loan forgiveness. Get information and maybe some questions answered, or better understand the process. And this is designed for UL system employees, which means it's a hard target market to design for, because it means everything, right? It could be faculty, leadership, students, and kind of everything. So feel free to ask questions from your own unique perspective, whether this is about you and your financial situation, or if you're in charge of students in different programs and you're here for information for them. So I'm Brian Bolton. Please feel free to contact me, brian.bolton@louisiana.edu. I'm in Lafayette. I have a website through our business school, business.louisiana.edu/financeispersonal. That website, I've just been posting slide decks and resources and other content on personal finance, financial literacy over the past couple of years. And my motto that finance is personal kind of gets to the theme of a little bit of what we're going to be talking about today, that we all have different situations, unique situations. And as we think about personal finance or financial planning, we have to understand everyone's situation first before we can come up with a plan. We all have different situations, family, professional, otherwise, and finance, its application is going to be different for everyone. But what we're really trying to do, I'll get through some of the conceptual quick today, but we're trying to provide happiness for our students, for our faculty, staff, professional staff leadership. And this is going to be this conflict sometimes between short-term and long-term goals, family needs, financial needs, personal needs, career needs, and just ultimately trying to figure out how to get to some balance of happiness across all these different tensions. And I like to use a variety of different quotes, certainly working in student programs. But top left is maybe the one I use the most often. A goal without a plan is just a dream. And as we think about devising a plan, that certainly applies to this loan forgiveness proposal. As I'll mention in a minute, loan forgiveness is the headline feature of the student debt program, but it's only one component, and there's other components that may be more significant to many of us in academia over the long term. Certainly any debt forgiveness can be significant, but some of the other program initiatives or actions may be more significant. when we put together a plan, it all starts with your education, your situation, in your goals. We combine those, and then we create investing, budgeting, taxes, bless you, and other resources to try to get you from point A to point B. Your goals, that's their destination. Current situation is where we are, and the financial plan kind of hopefully can help you get from where you are today to where your goals are in the future. And today, obviously, the debt management piece of this is the focus. And we're not going to talk about debt management holistically. We're going to talk about one very specific aspect of debt management. This is the infographic the Biden administration released 2 months ago today about the student loan debt plan. And this infographic seems short and sweet. Forgiving debt from $10,000 to $20,000 for borrowers of federal student loan debt. Forgiveness applies to certain income limits. One unique component of this proposal, or this plan, that is really independent of forgiving debt is that the student loan pause ends at the end of this year. I'll talk about each of these in more detail. To me, there are 4 components on this slide right here, 4 aspects, 4 initiatives, 4 unique initiatives. 1 is forgiving debt, 2 is the student loan pause, and then 3 and 4 are payment based on income for 2 different types of employees or income. That's been restructured, but I think really could have long-term, maybe the most significance long-term. The forgiving debt gets the headline and gets the most, either support or pushback, but the payment based on income is very significant and could benefit many of us in academia, or certainly many of our students or family members. So let's talk about what this is and what this isn't. We're not here to talk about student loan forgiveness as a public policy issue. There are other forums for that. Let's assume that what the student debt plan is as announced. We're here to discuss this, how it affect you, system employees, students, former students, advisors, parents, faculty, kind of any and every role that we play within the system. What do we need to know, and how do we take this forward, given the uncertainty that exists? And so we're here to kind of help you create this model of happiness with short-term, long-term tensions, family, financial, professional tensions and goals as well. And so address things in the short term, such as forgiving debt, and over the long term, such as payment based on income, potentially. We're going to assume that the policy structure that was announced on August 24th will become official. The Biden administration is pushing forward as if it's going to float, and it is official. But over this weekend, I guess it was Friday, a federal court deemed the forgiving debt improper, or whatever the term is. But if we go to the application, the student aid forgiveness website, the notice that we are told, the application is open, so we can still apply, and we'll walk through the application in a few slides. But debt discharge is paused. So we can still file, but we may have to wait until the debt gets discharged or relieved. As a result of the court order, we are temporarily blocked from processing debt discharges. We encourage you to apply if you're eligible. Brian Bolton would put the amendment on there. I encourage you to apply even if you don't know if you're eligible, because many of us don't really know exactly kind of some of it. There are a lot of gray areas as far as what eligibility may be. So go ahead and apply and let the Department of Education tell you you're not eligible later. Once the court order is lifted, or once that is resolved one way or another, the Department of Education assumes they can quickly process discharges when they're able. So 2 months ago, Katie and I started talking about this. We should do something. She was of the mind, let's wait until some uncertainty is resolved. We made the plan, we made the schedule, and then this weekend we got perhaps the biggest uncertainty since it was announced. But here we are, and so we'll push forward with what we know.
Hey, Brian.
Yeah.
We have 2 questions in the chat.
Great.
The first is, are graduate school loans included in this debt relief? And the second is, For students that are currently enrolled but not yet in repayment, does this apply to them as well?
Yes and yes. So all loans, graduate, undergraduate, are eligible. I'll mention it a little bit. We, as borrowers, do not get to choose which loans get the relief. So if you have, undergrad, grad, you have 4 or 5 different types of loans. We don't get to choose where the relief goes. The Department of Education has a priority list. In theory, it's the most costly will get relief first, the least costly will get relief last. So if you've had debt that's in default, that's an anchor, that's a burden, that's first to get relieved. And certainly graduate, undergraduate, any type of loan that's out there that you've had for graduate school or undergrad is eligible for relief. Second question, yes, all loans all federal loans, I'll go into this in more detail. Federal loans are the key. Private loans are not eligible. If they're federal loans that are held by the Department of Education. The key word is held, not necessarily issued, because you may have had a loan issued by the Department of Education that was then transferred to private, and that would be ineligible. But if it was issued by the federal government and is still held by the federal government, Department of Education, it's eligible for relief. I'll even talk about kind of the ways to check that. It can be a little bit of a scavenger hunt to confirm who holds your debt. But for most debt, unless you actively transferred it from federal to private, for most debt, with one exception, 2 exceptions, it'll still be federal. The 2 exceptions are Family Federal Education Loans, FFEL, and Perkins loans, which were part of a lawsuit, I guess a month ago maybe, and have since been excluded. But yes and yes, long answer, short question. So 4 components. Debt relief, again, that's the headline. It's the most contentious, both positively and negatively for many people. And we'll talk about it the most, I suppose, today. 2 is payment pauses ending. So since March 13th of 2020, you have not had to make payments on your federal student loan debt, and your student loan debt has not been accruing interest. If your balance was $20,000 on March 13th of 2020, it's still $20,000 unless you've made payments against it. It has not increased due to interest. That is ending at the end of the year, which to me is a financial planning guy is certainly significant. And then the 3rd and 4th components are both about repayment. Public service loan forgiveness, there's a one-time opportunity for enhanced enrollment. This opportunity has existed for about 11 months, and we have a week left. And so the timing of this hopefully is helpful. Perhaps maybe we're too late, but certainly you still have a week to take advantage of that if you're eligible. And then long-term income-driven repayment. It's always existed, it's just more generous now, more flexible now. When it comes to the court order, it's just about the debt relief. So there's 4 components, components 2, 3, and 4 unaffected. I understand why number 1 has been the most talked about in the news for the past 2 months from both sides, from all sides. But 2, 3, and 4 are significant as well. And nobody's, or I haven't seen any real pushback on certainly 3 and 4. 2 is, an ending of a benefit, whereas 3 and 4 are expansions of benefits as well. So let's go through these in some detail. At least number 1 we'll go through in detail. The headline, forgiving debt, $20,000 if you went to college on Pell Grants. That wording's a little weird. If you don't go to college on Pell Grants, you receive Pell Grants for college. And if you received $100 for a Pell Grant, you're eligible for the $20,000. If you receive $50,000 in Pell Grants, you're eligible for the $20,000. So if you received a Pell Grant, undergrad or grad, or vocational, if hairstylist, automotive, whatever your federal student loans went towards, if a Pell Grant was included, you're eligible for up to $20,000. If you never received a Pell Grant, you should still be eligible for up to $10,000. As I'll talk about in a minute, it doesn't necessarily know whether you remember or know if you have a Pell Grant. The Department of Education knows. And so you don't need to check a box saying, yes, I have Pell Grants. They know. They've got the records. So that's the headline. If you don't know, you can confirm it through your FAFSA account about a Pell Grant. You can confirm if the Department of Education still holds your debt through your FAFSA account at studentaid.gov. Part of I've been concerned for the past 2 months that a lot of students and graduates are going to think they're eligible, but they're going to log in and find that they're not, either because for whatever rule, or because their loan has been transferred outside the Department of Education. For most federal loan borrowers, the Department of Education still holds the debt, and that's who is targeted for relief here. They were saying you should receive relief, forgiveness, within 4 to 6 weeks. The court order has put a pause on that. No idea when, if, how that might be resolved or relieved. But as we saw earlier, the Department of Education is saying, complete the application anyway. We'll get you forgiveness when we can. Nobody's going to get cash. Nobody's going to get a $10,000 or $20,000 check in the mail. All that is going to happen is your online statement or your records are going to go from $25,000 balance to $15,000 balance overnight, or 25 to 20 if you have Pell. So you'll just see the credit of 10,000 or 20,000 online. Also, I don't think I have a bullet point on this. You will not, if your balance is 8,000, you're only getting 8,000 of relief. So you're not going to get you're not going to get a $2,000 credit if your outstanding balance is less than 10,000 or 20,000. Yeah.
We have 2 questions in the chat. The first is, are you eligible for debt relief if debt has already been paid off? So as an example, if a Pell Grant for $100 paid off, would there be a $100 tax credit for that amount that was paid?
I think the answer is no. And so, the extreme example is I paid off my student loans 20 years ago. I get nothing. I'm not eligible for anything. And so if anyone, paid off their student loans prior to March 13th of 2020, you get nothing. You don't get a tax credit. You don't get online balance. This is the court order. This is the whole debate about fairness and kind of all these things that's getting a lot of pushback on the relief. I paid off my loans 20 years ago. I'm getting nothing from this. Is that unfair to me? That's the conversation. And the answer is no. March 13th, 2020 is the key date that I'll talk about in a second.
So the second question in the chat is, should current students try to apply for a FAFSA loan right now to get the debt forgiveness if they apply before December 31st, 2023?
So I think the answer is no. When you dig around the studentaid.gov website, on one page they kind of have it hidden that this only applies to loans taken out before July 2022. And so they got it hidden. I really wish they were more transparent about that. If you have debt before July 2022, you're definitely eligible. I think if you take out debt now, it's going to be after the registration period, and it's not going to be eligible for this relief. Students who normally took out debt in August or assume for the fall, without even knowing about this, that one line on the website suggests they won't be eligible. I think the Department of Education, my opinion, wants to process help as many people as possible. I think if you're taking out loans now, it's going to be too late. I don't know if that July date is hard and fast, but it is there on the website. And so I think you're guaranteed of relief if you had debt before July. Any debt afterwards, I think, is a little more uncertain.
And Brian, third question, I have two more for you. If I was already enrolled in public service loan forgiveness program, do I need to reapply?
The answer is no.
Okay.
If you're making payments, you're in good standing with public service loan forgiveness. So if you're already in and you're in good standing, no. If you have missed payments and you're not in good standing and you feel like you have been kicked out, if that's the right term, of public service loan forgiveness, if you feel like you're ineligible, then yes, you absolutely need to reapply. That's what the enhanced window is for. Public service loan forgiveness, I'll explain this in a minute, has been probably the most generous loan forgiveness, loan repayment plan the Department of Education offers. And because it's the most generous, it is also the most strict. And a lot of people have been ineligible either because they missed payments or because the Department of Education was not giving them credit for public service. For the past 11 and a half months, there's been an expansion, and that expansion of eligibility that will expire next Monday. So if you're in good standing with public service loan forgiveness, no need to do anything. If you started in public service loan forgiveness, became ineligible for some reason, I would strongly encourage you to reapply, resubmit, because the enhanced eligibility is for people to become in good standing again.
Great, thank you. And
Thank
finally,
you. These are great questions.
if a student received a Pell Grant for undergrad, but then obtained debt for graduate school in the future, would they still be eligible for the 20,000 relief? For
Yes.
example, if they had 5,000 in undergrad loans and 15,000 in grad school.
My understanding is you get the full 20. That if you've had a $5 Pell Grant at any time in your life, you are eligible for the full 20 on whatever debt you have. Part of the policy implication. So we're not going to talk policy, but part of the policy implications is to support low and middle income families and borrowers, and Pell Grants typically granted to lower and middle income borrowers. And so that's, the administration is targeting relief or targeting enhanced relief to people who receive Pell Grants. So whatever the amount of the Pell Grant for whatever education, you should be eligible for the full 20,000 relief. So it's important to know we're October 22, 2022. We're 15 months away from December 31st of 2023. We all have plenty of time to apply, but make sure you apply. I would even suggest apply today or tomorrow. Don't wait at all for several reasons. A couple that we'll go through, but no harm in applying today. No reason to wait 12, 13 months, but you have until the end of next year. So I mentioned, the question came up, if you paid off your debt, do you get a refund? And certainly in my situation, I paid off my debt 20 years ago. No, I don't get anything. If you've made if you paid off your debt either in full or partially prior to March of 2020, you're the same as me. You should not get anything. But March 13th of 2020, COVID is affecting all of our lives and shutting businesses down and government entities down, pausing. And so the Department of Education in March of 2020 said, we're putting a pause on all student loan payments and student loan interest accrual. So just kind of March 13th, 2020, frozen in time. Whatever happened between March 13th and today is this kind of unique, novel window of time. And the Biden administration, part of their argument for giving relief is this is a COVID emergency support fund. And the pushback is, no, it's not about COVID at all. So, but that date, March 13, 2020 is critical. If you've made any payments since then you get a refund, or you can, right? So if you have made payments in the past, what is that, 30 months, 32 months, those payments were not required. You chose to make extra payments. You've paid down your balance. The financial planner in me loves that. That's great. But now this relief may limit the amount that you get back, or this proposal. And so you may want to get your refund as soon as possible, either back to where it was in March 2020, or at a minimum, get it back up over 10,000, right? So if your balance was 12,000, you brought it down to 8,000. Now, if you file for loan forgiveness today, you only get 8,000 of loan forgiveness. Well, why not get your refund, get your balance back up to 10,000, and then get your full loan forgiveness? So if you have reduced your balance since March of 2020, I would encourage you to at least get your refund back up to 10,000 or 20,000 if you've had Pell Grants in your life. Does that make some sense? The refund, I've heard from a lot of people who've continued paying. At the margin, it may not have, if you took your balance down from 40,000 to 35,000, it doesn't matter. But if you've taken your balance down from above 10 to below 10, or above 20 to below 20, that refund could be really important. Department of Education is saying that the refunds will happen automatically. I would encourage you to contact your servicer, the financial institution that you work with and make payments to, independently, just to make sure. This whole program is administrative, unlike anything the federal government has ever tried before. And so there's bound to be inefficiencies. You would expect inefficiencies, maybe there won't be. And so this refund I could see being a lower priority. But if those of you who do have made payments in the past 30 months, since March of 2020, you are eligible for get those payments refunded. I would encourage you to get at least some of that refunded up to the 10 or 20,000 as soon as possible. As mentioned earlier, if you have multiple federal loans with outstanding debt, they have a priority list. You don't get to choose, your servicer doesn't get to choose, but their goal is to get the most costly loans forgiven first. And so whether that's loans that have defaulted, loans with the highest rates, loan with the most restrictive terms, they have a priority list that hopefully will get you the most benefit from this forgiveness. Tax implications. Whenever we get a gift or a benefit, it's important to think about, what are my tax implications? The good news is there are none here. And so normally debt forgiveness would be taxable income. They are saying this is not taxable at the federal level. They're saying they make the rules. So as far as we know, this will not be taxable at the federal level. This is one of the American Rescue Plan introduced in 2021, and this provision was in there. What about the state level? Probably not. Probably not for us in Louisiana. As of now, Louisiana is not expected to impose state income taxes on forgiven debt. 13 states actually, we think it will be taxed. Louisiana is not one of them. Unlikely that Louisiana will put in a new law or provision requiring it to be taxed. Hopefully Louisiana has other priorities, but before you file your 2022 or 2023 income taxes, just make sure that you're transparent about any forgiveness and confirm that it's not taxable. 99% sure it won't be taxable, or 100% sure it won't be taxable at the federal level. As of today, it's not taxable at Louisiana level. So that's good news. Here's some of the fine print that we all need to be aware of. These loans that are in the proposal that we hear talked about are just loans held by the U.S. Department of Education. Federal loans. It does not apply to private loans. So if you got a loan from Citigroup or JP Morgan or some other lender, probably not eligible. And I say probably. It's only eligible if the private lenders have decided to offer the same benefit, which is very unlikely. This is only for Department of Education federal loans. When you got a loan at 17 or 18, you probably had no clue who was giving it to you. You can go on studentaid.gov or through your FAFSA site. FAFSA, by definition, pre-application for federal student aid, FAFSA is a federal program. So if you got the debt through your FAFSA application, it's probably Department of Education, it's probably federal, but it may have been transferred to a private lender. So I mentioned the FFEL and Perkins. I'll come back to that. Or I'll say it now. Family federal education loans and Perkins loans are the only type of loans that would have been moved from federal to private without you doing something, without your knowledge or your action. And so if you originally opened a FFEL or Perkins loan or took out, and I think these have not been issued in 10 or 12 years. So if you're a recent borrower, you wouldn't have a FFEL or Perkins, but back in the 2000s, you may. There was a lawsuit a month ago, and these were federal loans that they were issued by the federal government, but then were transferred through kind of federal processes, I guess, into private hands. So they're private today, they started public. You, as the borrower, didn't do anything. And so a lot of FFEL borrowers are really annoyed by that because they didn't make them private, but they're ineligible. I think that's 5% or something like that of all federal debt. So not a huge component, but significant if it's you. If you obtained a loan from a private lender, JP Morgan, Citigroup, it's not eligible. If you refinanced a federal loan into a private loan, if you consolidated federal loans into private loans, they're not eligible. So it has to still be held by the federal government Department of Education. I originally used the verb issued, and issued is not the right verb, held is the right verb. The loans, your outstanding loans, need to be currently held by the federal government. Sometimes this will be very clear, sometimes this will feel like a scavenger hunt. When you're 17, 18, or 25, 30, whenever you take out the debt, you're principally dealing with your university, your college. You're eventually going to get connected to a loan servicer. Maybe there's a bank involved. Maybe there's some other investors involved. And ultimately, maybe the U.S. Department of Education is the place where the money's actually coming from. These arrows could go the other way too. The point is, this flow of funds and borrowing, we as borrowers don't always know or understand that flow of funds. And so, FAFSA account, studentaid.gov account should identify who holds your loans. If you've had some other, if you've consolidated or done, if anything else has happened with your loans, if you've done something, or if you want to check on an FFEL status, it might become a little bit of a scavenger hunt. But starting with your university or your servicer can be a good place to go. If you consolidated federal loans, they're still federal. But if you consolidated federal loans into private, they're no longer federal. Income limits: if your annual income is single is less than 125, you're eligible. Married filing jointly, if your combined income is 250, if your combined income is less than 250, you're eligible. The wording on this seems to suggest if your income is below these limits in either 2020 or 2021, it doesn't have to be less than in both. So then you're eligible. You should be eligible regardless of when you file the application. They're not going to run out of money. They can talk to the Treasury and print new money. So as long as you apply before December 31st, 2023. And again, a theme is, we think these are going to be the rules, but everything is still a little fluid until you get your relief.
Brian, we have a couple of questions. Yeah. So is owned by the same as managed by? So one of our listeners' account says that it's owned by the department. However, it's being managed by another organization.
The managed by is probably the servicer. owned by is the key verb or the key term. If it's owned by the Department of Education, should be eligible. The managed by is an independent servicer, financial institution that is responsible for the processing of payments and balances and effect relief such as this. Is that it? Good. So what do you need to do? Here's the link to the application, studentaid.gov. You go to studentaid.gov. The big headline right there is debt relief and the application. It is now available. It is short and simple. We'll see it on the next couple slides. The system claims to be still processing applications, and if and when they're allowed, they will process the relief as well. So they have everything. The application is even simpler than I expected it to be. They have all the information. They're just really looking for you, I guess, to sign for responsibility, to say, yes, I want this, and I am me, and my income is less than this amount. The Department of Education has most of this information for all of us, but we need to apply just in case. Some people have already had their relief take effect, which is interesting considering the cause. But for most of us, or for most of you, since I'm not eligible, we need to apply. The application starts out looking like this. What is it? Who qualifies? How it works? That's it. And so they'll determine your eligibility. Your loan servicer will then notify you. Yeah.
Would you mind putting that link in the chat so that everyone can? Thank you, Whitney.
Thank you, Whitney. I'm a professor. I'm not good at multitasking. Yeah, thank you, Whitney. And so if you're ready to see the application, here we go. There it is. That's the application. There's one more question on the next slide. That's it. Names, former last name, if your name has changed since you took out the loan. Your social and your date of birth, that should track it back to the loans and to your FAFSA account. And again, they have all the information. It's just a matter of connecting it to you, your current email address, or not even your address, just your phone number and email. There's the whole application, or the 90% of the application. And then as we review and submit, we verify that we are who we are. I'm requesting this relief. I made less than the income limits for either 2020 or 2021, depending on your filing status. And so that's, it's or. If one of these six, if you got married in 2020 or 2021, you can go to whichever income level still gets you eligible, just depending on your filing stats. This is all Department of Education. The Internal Revenue Service, IRS, handles taxes. They're in Washington. They're across the street. These entities, they may not talk often, but they certainly can talk. And so the Department of Education's process and relief, they can verify your income if they need to. So we check that we're qualified there. You enter your name again, you check the box under penalty of perjury, and you're good. That's it. And then we wait. Simple application, just to verify that you're requesting this relief. And as of today, we wait at least 4 to 6 weeks, maybe longer, depending on the pause. Questions, thoughts, comments on the relief? I think one point that I did not highlight, it in many cases your parents maybe took out the loan and now the loan is tied to you. It should be at the borrower level. So if mom and dad have 3 children, all 3 children are eligible for relief individually. All relief is at the individual borrower or student level, not a family level, not the parents level. If you are still a dependent of the parents may get the relief, or depending on the loan is assigned, but it should be at the individual student level. Apologize for the landscapers outside. Anyway, point two. This is a big one to me. I'm a financial planner guy. This is a big one. December 31st, the free ride ends. Since March 13th, 2020, your student loan has not been accruing interest. Your federal student loan has not been accruing interest. You have not had to make payments. You're allowed to make payments to reduce the balance. If you're able to, it's pretty smart probably to do this without interest accruing. But that ends on December 31st. And so both the Trump and Biden administrations, continued these pauses for a while. And part of this proposal is that ends December 31st. So you've not had to make payments, interest has not been accruing, that ends depending on your status. So if you are a current full-time student, that should not end, right? If you're a current full-time student, you're eligible for deferral and interest does not accrue until 6 months after graduation. That doesn't change. This is only for people whose loans have been in repayment since March of 2020. Again, if you're a full-time student, undergrad or grad, you should be eligible for deferral already as a function of just being a full-time student. That is independent of this. That doesn't change. So students, if you're full-time students, nothing changes January 1st, 2023, as far as interest accrual or repayments. What should you do? Talk to your servicer, confirm that your payments are restarting in January, confirm that interest will begin accruing, see if there's anything else you can do with them. If you want to renegotiate the payments or talk about a different payment schedule, maybe you can. The Department of Education doesn't handle the payment side. They handle the lending side. The servicer handles the payment side. And so that's the person, the entity that you should communicate with about the payment, the pause ending December 31st. As I said earlier, nobody's complained about this. So for better or for worse, I think we should all expect this to take place December 31st, January 1st, that for everyone with outstanding federal student loans that are in repayment, you will be required or expected to make payments in January, and interest will begin accruing or resume accruing. I've talked to a number of people who have taken their repayments or payments out of their budget in the past 2 years. It's time to put it back in, or talk to your servicer and renegotiate or restructure how you repay. Or potentially, maybe for many of us in academia, we can go into public service loan forgiveness. Also, regarding the pause, I would strongly encourage you to get your loan forgiveness as soon as possible so that when interest resumes accruing, your balance is $10,000 or $20,000 lower. I'm a teacher, so here's some math on that. Assume your balance is $30,000, your interest rate is 6%. You'll accrue $1,800 of interest in the first year, $1,909 in the second year. If you don't make any payments, you're just accruing interest. After 5 years, that $30,000 would be $40,000. What if you get your balance reduced to the $20,000? Take your $10,000, reduce your balance. You'll accrue $1,200 in the first year, $1,272. Total balance would be $26,000. Adjusting for the $10,000, that's about a $3,400 difference, just less of interest accrual, compound interest, interest on interest, simply by claiming the $10,000. Your benefit won't be this significant because we're talking matters of days or weeks or months. But the point is, get the benefit as soon as possible so that your balance will be reduced before interest resumes accruing. For some people, you may have some work to do over the next week, and the benefit from that work may be pretty significant. So public service loan forgiveness has been around for a while, years, and it is designed to incentivize, supports people, borrowers who are employed by nonprofits, the military, federal, state, tribal, local governments, public service, people who are engaged in public service, whether it's college professors, high school teachers, nonprofits, government. Pretty broad definition of public service. And probably the best benefit is that if you work in public service for 10 years, make payments for 10 years, you are eligible to have your loan balance completely forgiven after 10 years. That's not new. That's been the structure for a while. As this is the most generous repayment plan, I think that's right. It's the most generous I've seen. It has also had strict requirements and regarding loan payments, eligibility, employment, so forth. For the past 11 months, these strict requirements have been less strict. And you may have the opportunity to earn back credit and get in public service loan forgiveness, back credit on either payments or work. And so they've offered, they call them temporary changes. It's been a year that provide greater flexibility, either to confirm your employment, to receive credit for your employment that maybe previously was not considered public service, or to true up any payments issues, if that's the right term, that may have popped up since you entered public service loan forgiveness. So earlier I mentioned if you're in good standing, you shouldn't have to do anything. This is designed if you've never enrolled and you think you've been eligible, or if you enrolled and you either stopped paying or you changed jobs and you haven't really continued in good standing. Now's your chance, now's the time to become in good standing again, to confirm your employment and to receive credit for payments. Again, these changes expire next week, next Monday. I don't see that changing, or if it does, it would be a surprise. Enrollments on or after November 1st will not be eligible for the enhanced treatment. Public service loan forgiveness is not going away. It's just the enhanced expanded treatment. And so if you don't, for those of you who may already be in it, keep doing what you're doing. For those of you who maybe could have been in it, but you haven't, this is for you. People who you weren't aware this existed, or maybe they fell out of good standing, this is for you. Or maybe you've changed jobs and now your job is eligible, or whatever. If you work in public service and you've not been in public service loan forgiveness, strongly encourage you to enroll in the next week. Enroll means apply effectively, submit your employment information, and so that you can be eligible and be enrolled. What does it mean to submit employment? You do have to contact your previous employers, get them to confirm the work you did, the time period, and so forth. PSLF.gov is the website on kind of more detail. The PSLF is largely independent of everything else we've been talking about. The 10,000, 20,000, independent of that, but the Biden administration has kind of lumped all these four together, these four components, to make it, to remind us or make it seem, whichever you want to consider, like a broader program than it really is. Maybe they introduced this to distract us from the 10 or 20 or whatever. But the public service loan forgiveness is not going away, but the enhanced window to enroll is going away next week.
Hey, Brian.
Hey, Kate.
Do public service loans have to be 10 years old to apply for this public service loan forgiveness?
Nope. So the loan for the cool question. The enhanced opportunity is to enroll in public service loan forgiveness, not necessarily to enroll in the program to have the opportunity to have your loan forgiven. This is not necessarily about getting your loan forgiven. However, to your question, if you have been in public service for 10 years, if you've been making payments for 10 years, but you haven't enrolled in public service loan forgiveness program over that time, you may have your entire balance forgiven. So if you do have the 10 years accrued, you should be eligible for forgiveness. If you've been in public service for 3 years, but you've not been enrolled in this enhanced window gives you the opportunity to enroll and cut your 10-year clock down to 7 years remaining.
That
That
makes
makes some sense?
Next question. Do you have to consolidate your student loans to be eligible? One of our listeners consolidated in the 90s, and when she did it, it consolidated into two separate subsidized and unsubsidized loans.
Eligible for public service loan forgiveness?
Yes.
I don't know the answer to that. My sense is no, but no, you do not have to consolidate. But I'm not positive about that. That's an interesting question. So the unsubsidized federal loans have not existed for a decade or two. They've existed. They have not been issued. And so a lot of the guidance that we are seeing is only for is focused on subsidized. But that's a cool question, or an interesting question. And if you want to email me, brian.bolton@louisiana.edu, we can figure it out together. We can try. Yeah. So for many of us in public service and academia, this is an interesting opportunity to apply for this program that you may be eligible for today, and you may get benefits from today or in the future. The fourth component is income-driven repayment. Again, this is not new. Public service loan forgiveness is a special kind of income-driven repayment. If you enroll in public service loan forgiveness, you work 7 years at the university, then you go work for Amazon, you will become ineligible for public service loan forgiveness, but then you can kind of transition into income-driven repayment. And so you'll still get credit for all your payments within income-driven repayment. So it allows borrowers to repay debt based on their income, ostensibly to allow students or professionals who go into lower paying careers flexibility in how they repay the loans. So your income dictates your repayment, not a bank. And so you will still owe the entire amount, probably, but income-driven repayment will adjust both the payments and the term as necessary. Again, public service loan forgiveness is a special kind of IDR. Income-driven repayment, many of us in academia will actually be in both programs. If you're in public service, you're automatically in an income-driven repayment plan. But there are a lot of people in income-driven repayment who aren't in public service.
Hey, Brian.
Yeah.
Could you be eligible for both the 20,000 or 10,000 debt forgiveness and apply to be part of the public service loan forgiveness?
Yes, absolutely, absolutely. They're lumped on the same infographic, but administratively they are independent, separate programs. Apply for the 10 or 20,000 today. If you think you're eligible for public service loan forgiveness, get that taken care of in the next week. Maybe that's the bigger priority. But you saw the application for forgiveness. That hopefully some people have completed that while I've been talking. And then get your public service loan forgiveness in order over the next week and get enrolled in that if possible. I had a student who has $200,000 in debt, and he's a counselor, I guess, psychology counselor, and he's going to go work for the VA, and does that for 10 years. His $200,000 should be forgiven, and so that's who it's kind of designed for. Kind of. I don't know if it's designed for people with 200,000, but it's designed for people in public service. That's always been there. That's not going away. That's not even being challenged. It is independent of the 10 or 20,000. As is income-driven repayment. This is not. This is a long-term benefit, a long-term proposal. The proposed adjustments, again, the proposals have not been challenged in any way, will substantially reduce future monthly payments for lower and middle income borrowers. Previously, you could be eligible to repay 10% of your income a year. Now it's been reduced down to 5%. Pretty big change, certainly at different income levels. It's also changed the definition of what income is, meaning It's harder to have a big income. Does that make sense? And so, when you report your income under income-driven repayment, you probably want to report a lower income, so your payment can be lower. And so they've changed that definition, so now it's harder to have a higher income. If your loan, this bullet point is new. If your loan balance is $12,000 or less, you will get loan forgiveness after 10 years instead of 20 years. For borrowers. So under income-driven repayment, if you make payments on time for 20 years, your debt's forgiven. Your undergraduate debt is forgiven. Part of this new proposal, if your balance is relatively small, 12,000 or less, that 20,000 changes to 10,000. So that's a small benefit for many, but especially over 10 years, but still pretty cool. And we talked earlier about the pause on interest accrual. That is now being applied to income-driven repayment, but without expiration. So the new proposal will cover unpaid monthly interest. And so if your income is relatively low, or you're unemployed, or you take a gap year, whatever, so that your payments should be zero. Your payments should be zero. By the rule, you can pay zero and your balance won't increase. And so they're capping the payments required. They're capping the interest accrual. And I think over the long term, this can have significant benefits to low and middle income borrowers. Why should you consider it? Gives you flexibility in how much debt you repay. Also affords you some ability to choose careers based on reasons unrelated to how much debt, rather than having to go into public service potentially to get the relief. You can always pay more than what's required, but you don't have to. And then, as I mentioned, on the last slide, for undergraduate loans, you can, if you make on-time payments based on income for 20 years, your balance should be forgiven. Graduate debt, it takes 25 years to get that forgiven. For me, 20 and 25 years are really long-term. It's hard to make financial plans based on that. But even if you're not targeting the forgiveness 20 and 25 years away, this is a pretty beneficial program, because it gives you flexibility to pay what you can or what you want, rather than having a financial institution or bank tell you what to pay. Income-driven repayment is different to public service, even though public service is a special kind of income-driven. The proposed changes, certainly the forgiveness after 10 years is only for undergraduate loans. There's no changes for graduate loans. And again, the goal is just to encourage more borrowers to pursue income-driven repayment, because many people will benefit. You have more flexibility. You may not need to do anything now beyond considering whether you should use it when it's time to repay. If you're already in repayment, you may be able to switch into income-driven if you've not been in it. And even if you don't get the 20-year or the 25-year forgiveness, it can give you more flexibility in how you repay your loans. So key dates, the application is up for forgiveness. You should get your cash 4 to 6 weeks, you should get your forgiveness. You will not get cash, sorry. You should get forgiveness 4 to 6 weeks later, subject to court orders, other potential challenges. I'd be remiss if I did not remind us that midterm elections are 2 weeks from tomorrow, and that may be a key date in court orders and challenges. I don't know whether that helps or hurts the forgiveness, but it's on the calendar. Nothing like this has ever been done before. Administratively, I'll be honest, I've been impressed by kind of just the application, how simple and straightforward it is, and hearing stories of people getting relief. But if we have 50 million borrowers applying, it may take longer than 4 to 6 weeks, again, especially with court orders and challenges. The end of next year, the window for forgiveness is closing. Apply as soon as possible so that you're in the queue. Right? If you've ever applied, submitted your taxes in February, you get your refunds pretty quick. If you turn in your taxes April 15th, it could be 6 months before you get your refund. Different department in Washington, but I suspect it's probably similar. Get in the queue, get in line, get your refund, your forgiveness processed as quickly as possible. For other changes, you have a week for the enhanced enrollment or re-enrollment into public service loan forgiveness. Talk to your employers, your previous employers, get some proof of, get your proof of employment. pslf.gov, there is a form that for application and for employment verification. pslf.gov. The end of this year, student loan pause ends January 1st. The next day, your student loan debt may begin accruing interest. So get your forgiveness before the end of the year. Certainly apply by November 15th, if not October 25th. And then continue checking studentaid.gov, DOE, education.gov in case there are challenges, pauses, modifications. There's the link or the link for forgiveness again. You can check your FAFSA account, studentaid.gov, to determine loan status, eligibility, who owns it, any of those details. If you are in doubt about what your income is, if you're pushing the 125 or the 250, get your tax returns to confirm, contact your servicer. Should be straightforward for most of us, most of you. Might be a scavenger hunt for some. You can start with your university or studentaid.gov, and then begin thinking about if you need to do anything special in January, such as repaying your loans. And of course, watch out for scams. I've had students contacted about scams. I've had students contacted with people claiming to be able to get them to the front of the line. Give me $100 and I'll get your loan processed immediately. Hang up. Nobody should call you to gather any personal information. If anyone does, hang up. You should not have to pay any fees for the application or for processing. Nobody can get you to the front of the line. Your servicer can't help you. Your servicer can give you information about the process, about your status, about your situation. Your servicer cannot help you get the forgiveness. The website is the only place that can offer the forgiveness. The website with the extension .gov, studentaid.gov, they're the ones offering this, structuring this, processing this. Nobody can get you to the front line. Go through the studentaid.gov, be patient, ignore anyone else who may be trying to help you, claiming to help you. Financial planning should be a lot like education planning. Set our goals, analyze where we are, execute our plan. This is a large part of executing our plan. Using this opportunity for debt forgiveness, restructuring, help you get to a better future place than where you are today. Combining our short-term, long-term goals, family needs, financial, otherwise. Go without a dream is just a dream, but also maybe my favorite quote in this context from Alice Walker in the middle. Don't wait around for other people. Be happy for you. Any happiness you get, got to make it for yourself. Get your application for forgiveness in today. Hopefully it'll be processed for you as soon as possible. If you think you're eligible for public service loan forgiveness, get on top of that over the next week and get enrolled or re-enrolled and begin on that track to support your future too. I'm Brian Bolton at Louisiana. Thanks for attending. Thanks for all the great questions. I'll stop sharing now. If there are any more questions, love to hear them. Any comments, questions, thoughts, love to hear them.